Hello, everyone. My name is Cody, the host of The Faces, Entrepreneurs Are People, and the CEO and founder of Telehelping, a virtual staffing organization. I'm excited to bring our guest in here today, Marcel Miu. How you doing, Marcel?
Doing well, Cody. Thanks for having me.
Yeah, I appreciate it. I had to switch from I've had too many cups of coffee, so I went to tea, because you'll see that last night I woke up in the middle of the night, I was like, did I leave the fan on? And turns out it was downpour. So uh, the unpredictable Northern California weather during this time of year. So
I hear ya.
excited.
I hear ya.
I'm
Same here in
excited.
Texas. Gets
Oh,
kind of crazy
geez.
sometimes.
What part of Texas?
Austin.
Oh, yeah. Oh, Austin's known for its swings, isn't
Yeah, a
it?
lot. I just moved down here like a year ago, so it was kind of eye opening. I wasn't quite aware that would be how the weather works here.
That's great. No, I grew up in Charlotte, North Carolina, which is basically it's been compared to Austin before. You know, it gets all the season. One moment it's too hot. Next thing you know, it's like, is this flurries or this snow? What is going on outside? So I'm sure we'll get to it. Marcel, you know what? In the name of my business, which is outsourcing, there's no better person to do your introduction than you. So, tell us who we're talking to today.
Yeah, great. Appreciate you having me on again. As mentioned, my name's Marcel Miu. Originally from Cleveland, Ohio. So spent, my childhood there, early adult life in Cleveland. Ended up moving to New York City, working in the finance industry for, call it like 10 to 15 years, somewhere in that range. Did that. And then about a year ago, moved down to Austin, Texas, launched a financial planning practice where I work with serving tech professionals. So both folks that are working at private startup companies, as well as in the big tech space. So working with them across a holistic range of financial planning, everything from they're kind of managing their equity, tax planning, tax optimization, and the broader things that kind of hit everyone's life, really anything that has a dollar sign in front of it. So, moved down here to Austin to be closer to family, wanting to start a family of our own. It's pretty expensive to live in New York City. So
Yeah.
that was a big catalyst for us to making the move. We're, going to be bringing on a new family member here in March of 2025, our first baby. So we're pretty excited, a little bit nervous, cautiously optimistic, doing everything that we can do up until then to get ourselves ready and prepared to kind of take on that new role.
Yeah. So you said this is your first kid.
First kid.
Man. So you were nervous. I was nervous myself.
Pretty nervous. Yeah.
The great unknown.
I've been pretty preoccupied with my new business as well. So I guess that's maybe taken my mind off it a little bit, but I need to really start putting more of a focus on really getting myself ready for the first baby here in, just a couple of short months.
Are you waiting to find out if it's a girl or a boy, or are you just going to wing it when it comes?
It's a boy. Yeah. So we did get confirmation. It's a boy. We're both very excited, my wife and I. And yeah, so, again, I'm sure there are plenty of things that I should be thinking about, which I have yet to do so, but I'm going to be diving in here shortly. Got a couple books queued up on, some reading I need to do in advance.
Well, as they say in the Marine Corps, the only good way to learn how to get shot at is get shot at. And so,
there you go.
I have a 2-year-old boy now, and he's great, just great. He came out of nowhere, and we're like, oh, I guess we're, earlier than we expected. Sounds good. And so now we're having another boy. We're in May, and so I was really happy because I have the gist of a boy, which is basically just try not to hurt him as much as he's going to hurt himself. And then I'm like, oh, I can do that. But a girl, I was petrified of. So I think that at least you got out on an easy escape.
Yeah, of course.
Are you, myself, when I went into parenting, really telehelping the world kind of took a pause for me. I didn't really care too much because I was like, oh, I'm having a kid. I have a lot of really great team members and they can kind of operate the business. And so I put the organization kind of on autopilot, and we were just like, keep our clients, right? If we get new clients away, great, but keep our clients was the goal. And I really just took a whole year of keep the clients. It was kind of nice. How are you preparing for this journey, this takeoff into parenthood?
Yeah, phenomenal question. And really for me, a lot of it has been, again, given that I launched the new business, call it a year ago, it's going to be a lot of work no matter what. Right. And then, but even in addition to that, knowing that we have the timeline of the baby coming, I've been front loading a lot of maybe what I would otherwise perhaps be kind of pushing into, the normal work hours. I've been front loading that a bit, particularly from a kind of business development perspective, things like that, really trying to get the client pipeline built and things like that, which I know is undoubtedly going to need to take a bit of a back seat once the baby comes, right? Frankly, going to want to take at least a few weeks off completely once the baby enters the world, and needing to, as you said, start to get things a bit on autopilot, right? Leverage other members of the team to help get things in place. And problem is that when you're a new business owner, it's very important that you kind of do everything first, so you know how to do it. It's hard to evaluate somebody in terms of whether they're doing things the right way or doing a good enough job if you yourself don't really exactly know how to do it. That's sort of the way that I've approached it. Maybe it's not the way everybody goes about it.
Zero.
Each their own.
Yeah, 0 to 1 is, I tell people all the time, for anyone who's never started a company, for one, being at an early stage of a company is not being a founder of a company. Okay. And so I'm right there with you, because I've been early stage, right? And early stage has its own difficulties, right? I was first 6 of a company that is worth, $500 million now, right? And I was there for a lot of its E rounds and stuff, and that was great. However, I never knew the struggles until I became a founder later on, of how hard it was for him to get us into that building, get that round of funding. And so, at that point in stage, you are everything. And so it's hard to figure out what everything is if you're like hire a person. And, for transparency, everybody, Marcel was someone we were working with, trying to help him find someone. He ended up finding someone in his network to work with him. But, we oftentimes work with a lot of clients who come in and they're like, I want to hire someone to do X. And we're like, great. How are they going to do X? And they're like, I don't know. Well, that's difficult, right? We had this conversation. You're like, well, I don't know how to do it yet, so I don't really know if I can hire someone to do it for me.
Right. That's 100% right. Because look, it's case by case, and there perhaps are going to be certain things that maybe that doesn't apply as much, or maybe it's easier to kind of come up to how to exactly do something. But the key foundational aspects of building a business, how are you going to acquire clients? You really need to figure out a lot of that on your own, or at minimum, be extremely involved, whether you have somebody else helping you out or not. Because once you sort of find that magic formula of what resonates, then you can start to train somebody, coach somebody, and how to execute that on your behalf. But until that happens, it can be unfair to try and offload that to somebody else where you're not necessarily sure how to evaluate them. Because if they don't produce results, is it that they are falling short, or that your process is falling short?
No, and I'm a Six Sigma big process person. Love my processes. And one thing my team has loathed me for in the month of December is, for those who haven't been on with me in the years past, is December to me is process improvement month, right? So I'm not like, if they're in our pipeline, like we have people in our pipeline right now that we're placing with virtual staff, but really what it is about is, what could we have done better? Because, we do have it at our size now. We do have people who've come on that I haven't outlined their job, right? I don't know what their job says technically is, because that is the director's job, right? Or the person in charge of them. And so for us, we're like, okay, well, I can see when we look back at processes, like, well, there's a hole somewhere, what I refer to as holes in the fish bucket. Like, we're catching the fish, but it seems like things are falling to the wayside. Well, let's patch some holes. And that's what I love about December. It's process improvement month, because my mentality is we're already in 2025. It's just, are we prepared for 2025? So, it's great that you're already, in December thinking about, well, March is coming, right? I have to get ready for March. I have a gentleman I've done a consulting work for who does virtual assistants with us. And I was helped building out his team because he didn't know what his processes needed to be, right? And, in his defense, he was an engineer, right? He was a founder, entrepreneur, great. But sometimes what we are can get in the way of what we need. And I had to come on board and kind of create what he needed. And in that process, there's a lot of ambiguity, because that you have this really great AI product, right? In this particular case, and he knows everything about that. And it's like, how do I get clients? And so you being able to bring on people and walk them through their pathway to success and identify those makes it much easier. So at least you have that flexibility.
Yeah, 100%. I mean, I'm always looking to improve processes and procedures, but there's a fine line that needs to be walked there in terms of spending too much time on that, particularly in the early days of launching a business.
Correct.
I mean, look, financial advisory practices come in many different shapes and forms. Some people begin an advisory practice with a book of clients, right? That's a little bit different than the way I went about it, right? I started with 0 clients and really, all kind of an organic build out. And with that being said, your number one priority really needs to be business development when it comes to that. How do you attract people, right? Because business development can vary by the person. It might take you 3 days to convert one prospect into a client, and another one 3 years. So you have to really focus on, hey, how do I start to build a robust pipeline that's going to pay off at various points in time. You want to be strategic and tactical in some ways as well. But it's really building out a whole system and a bunch of underlying processes that feed into that machine, if you will.
Yeah. And well, Marcel, and this podcast is all about who you are as an entrepreneur and as a person. So I'm going to ask personal questions. And so,
Sure.
Going into having a child, is your wife planning on working? Entrepreneur, started this new business. How, is your wife, going to be working shortly after the birth? How does that weigh on you? Because that's something my brother just went through last year. His wife took a year and a half off, and they were a dual income house, and now they weren't. And there's a lot going on there.
Yeah. I mean, so it's something that we spoke about for a while. And I think we had the benefit of both working in New York City for a long time, spending well below our means, saving a lot. So we always knew, because again, we were both in New York City for our careers, both grew up in the Midwest. Eventually your timeline comes to a close in New York City, unless you're, kind of have a bunch of family there or are making multi millions, right? Then perhaps you can make the math work out. But for us, it was pretty clear eventually that, hey, we're going to want to make a move eventually, want to get closer to family, which we have family here in Austin.
That's
so
great.
It was always a topic of conversation was, what is the work dynamic going to look like? Right. So my wife really likes working. She's in the fashion industry. So, she's working down here in Austin, really likes it. And the plan, obviously any plan can change, but the plan is definitely for her to go back to work after the baby is born. So her company offers a generous maternity leave situation. So that's great. We're going to look into things like nannies and having, grandparents help out and things like that. So I think we'll be able to manage the working situation, right? So again, time will tell, but that's at least how we're operating at this point.
No, that's great. And, I am a single income household. Though I say my wife is my business partner in many ways. she owns restaurants that we started, and she operates them. Her one meeting a week kind of mentality. So it's definitely not so single, but it feels single. And so I always have like that extra pressure, I think, in the back of my head, like, worst case scenario. So I'm a huge saver myself, and I am way below my means always. Right. And I think that's a comfortable place to live.
I agree. I'm always looking for a way to get more out of something than maybe you otherwise might think you can get. But yeah, it helps, right? Yeah, having that cushion, it really makes things a lot lower stress. And we all know stress is very bad for your health. So I'm a big, very health conscious guy. So that's the last thing I'm going to want to do is, kind of live above our means. And it's fine if it's for a short time frame, a couple of years sort of thing. If you've built the runway for many years, then, you can actually still do it that way. It doesn't mean that you always have to live below your means at every single point in time.
I mean, before I was comfortable, I, for many years, was like uncomfortable, not because I was living above my means, just my means was very low. So was my income, starting a company, right? And so you're like, man, I don't spend a whole lot. It's just, you don't make a whole lot at the same time.
Yes,
and so that's a whole different mentality. It's, you mentioned stress, Marcel. My good friend and I, we operate a small little hedge fund, and we both trade different responsibilities. And I notice our approach to things is always very interesting, because I'm a low stress person. Like, I want low stress. I aim for it. And so the way I go about managing my responsibilities and positions in the organization are very passive, in the sense that, like, oh, well, this will go well, and it's modest and it's conservative. He's the opposite. 3 or 4 cups of coffee a day, Celsius energy drinks, right? Stress eats all day. Makes really great returns. But I said, what's the good on all that if you have a heart attack?
I agree. Yeah. I've seen health issues and stuff like that in the family, take its toll kind of earlier in life. So it's like, it's been a very big priority for me to really, ensure that health is top of mind. And, some dosage of stress can be helpful sometimes, but like chronic stress is not really what I'm looking to have be part of my life.
Yeah, cool. I understand. And that's a great perspective for someone who works with tech founders and tech folks. So, because the startup world, we are professionals at stressing, right? Because the stakes are so high. And, I was in a well-funded startup that I founded with my formerly mentioned friend. And it was, for years, 12-hour days, 6-7 days a week. And so, you're talking to those folks. How does your conversation go? What stage are you speaking to those folks? Are you speaking with them when they're in that, hustle and bustle phase? Are you speaking with them as they've already cashed out, or they're looking to cash out? Like, what stage are you catching these notoriously stressed out people?
Really runs the gamut, right? So, I'm generally working with folks that are working as employees at VC-backed startups or in the big tech space. So, when it comes to somebody that works at a startup, it might be at a pre-seed startup, right? Or it might be a Series D startup. It kind of just depends, right? They all have their own runways, and frankly, somebody that's at a seed level startup, in their next role, they might be at a Series E startup, right? So there's never that their pain points can evolve in some respects. Because for me, a big area that I focus on with them is helping them to maximize their equity compensation in terms of the upside, right? There are so many different tax nuances that come into the picture where, you're trying to make sure that you set yourself up for success. As you know, Cody, there's never a guarantee that just because you got equity in a startup that it's ever going to be worth anything. Okay. So what you need to do is you need to try and stack the deck in a fashion where if it actually ends up being worth something, that you maximize the net gain that you get from it, right? Because, a lot of what I mean by that is a lot of people will wait and they say they have stock options, right? With that, you don't actually own the stock until you buy the stock. That's what the stock option means. But if you wait until the company gets acquired or has an IPO, then you can really lose a lot from a tax perspective, because you basically, that income, particularly if you want to kind of cash it in the same day, most of that income is going to be taxed at your kind of marginal income tax rate. And, if you get a big windfall, that's usually at a very high income tax rate because it's a progressive tax bracket. Whereas if you can be more strategic about it earlier on, you can convert a lot of that into where once that exit event happens, much of that can be converted into a long-term capital gain. So that's about half of the tax rate that you see with something that's, kind of not acted upon until, it's too late, if you will, if you want to call it that. So that's one part of the coin is just really helping people maximize, what they get out of it. I mean, everyone's working hard at startups or big tech, no matter where you're at. So, unnecessarily paying more to the tax man, it's not anything nefarious. It's all very by the book, but anything that you're paying more is, something that didn't really need to happen. So again, financial planning is very interesting and unique because it's like solving a puzzle. Everyone's situation's just a little bit different, right?
Yeah.
I work exclusively with tech professionals, but all their like the facts related to their picture are all a little bit different. How they perceive taking on risk and the cash flow balance that they have, right? Because for some people, it's, well, hey, I want to be strategic, but I'm spending way more than I earn right now, and in order for me to be strategic, I'm going to need to reserve cash to buy my shares, right? Well, maybe that doesn't work because the person has a bad cash flow picture. So it's like, all of those different elements really need to be evaluated in one overarching framework. So that's why I really like, working with these sorts of folks, because it can get pretty nuanced. But, again, if you like solving puzzles, it's a good profession to be in.
No, well, two things I understand. I just recently purchased options from an organization that I was a early stage founder at, and it surprised me how much I had to come out of pocket. I forgot all about it. Completely honest, forgot all about it, and then it came due, and you're writing a 6-figure check, and you're like, "Wow, I really hope this pays off." Because it's one thing starting at a company, working at a company, and getting options. Right. And then you get those options. You're like, wow. You're like, man, I have millions of shares. This is great. Well, you have millions of options. Right. And then you have to, even at 0.05 per share, right? When you have millions of options, that's a lot of money you have to spend. And I sat down with my wife and we had a really long conversation. And I was like, is this something we want to do? And she sat here and she said, well, I remember when you worked for that company. And I have to say, you're going to be so mad if they exit next year. And it turns out 4 months after I put in the check and took possession of my shares, we're doing a recapitalization event in May. And so PE companies are coming in and buying. And so at the end of the day, me, and I want to connect you with someone. I have a very robust financial planning relationship with me, but I have a friend of mine who he was a founder, the original founder of the company that's going, and he has millions of shares, millions of dollars worth of shares, and he has no idea what to do, right? And I can only give my opinion. I am not a financial advisor. and I always kept repeating that to him because he's like, Cody, what should I do? What should I do? And I said, you should talk to someone, right? And because, and I'll definitely connect you because someone in his position, he could lose half, if not more, of his position, his value, going the route that he may or may not go. So I'll connect you to see if that could be a good relationship because he's a former founding COO of the organization and sits on millions and millions of shares. And there's this position coming up and he doesn't know what to do with it. So, and
that's exactly that's the problem is, hey, coughing up the cash for something that, look, the data says 90% of startups, don't end up ever going anywhere, right? They go to zero. So that's the real conundrum is, hey, I have all these shares that on paper are worth a lot, but there's no guarantee that it's ever going to be able to be realized, right? In some sort of exit, PE buyout, IPO, some other company acquires you. That's really where you can ultimately realize or capture the value that's been accrued to those. There's no guarantee that that happens. So the conundrum is, well, do I allocate this money here for something that, doesn't have incredibly high odds of paying off, but it does. If it does, it can be worth a lot and be life-changing in some respects, right? So that's where you need to be thoughtful and strategic about it, because it's not always just, hey, Cody needs to come up with this money. There are sometimes other ways to go about it, right? There are other platforms where they'll say, hey, we'll fund the exercise cost, but we get a slice of the pie. And for those platforms, it makes sense because they then do that with a bunch of companies and they diversify their risks. Whereas Cody alone funding that exercise by himself, he's taking all the risk on, right? Yeah. So there are many different ways to go about that. So that's why it's important to kind of understand what options you have available to you.
And that's something that I was considering, because I asked myself, how much do I want to come out, right? Do I want someone to share in this risk with me? Right. I sell premiums on the market all day. And so, I have, tranches of premiums I'm sharing. And I know that a 0.05 option is, in the world of trading, is a low possibility option, big payout, low possibility, and so when I was seeing 0.05, I was like, I had to get all types of advisement, much like you give people, to make sure I made the right choice. And so, what I liked what you chatted about there is, there's no guarantee, right, in this game, especially when it comes to dealing with founders and their options and their equity. And I tell people all the time, their guarantees are nice in life, but oftentimes rare. How do you find, dealing with, I imagine, generally optimistic people? I know that in the tech space, when you have equity, you're like, this is going to be worth millions. It's going to be great. I'm already thinking out the color Porsche I want to buy. How do you navigate those relationships and optimism, or maybe even, if you have skepticism from the folks as you're trying to advise them on best options to make with money?
Yeah, I mean, interestingly, it kind of just depends on the person, right? And so what do I mean by that? I think, yeah, if you're actively at a startup and you have conviction and you want to be there, you very likely feel good about those shares that you have, right?
Yeah.
And that's where maybe the conversation more so comes down to strategically planning your cash flow positioning to ensure that you have the money reserved in order to be strategic around that. So what do I mean by that? Let me unpack that a little bit further. Okay, hey, whenever the valuation of your shares go up, the tax impact when you exercise also goes up. So you can be thoughtful and try and exercise stock options in every calendar year to try and kind of keep that cash flow hit manageable, right? Mm-hmm. Particularly as, in theory, as you raise more funding rounds, the valuation of your company goes up, and so does the tax implication of the exercise. Yeah, the strike price of the options is the same as what they were when they were granted, but the way the government looks at it is they perceive that the difference between the strike price of the options and the valuation of the company is the kind of the taxable benefit that you can be taxed on in that tax year. So that's why I always kind of stress that importance to people is, there is some merit to being strategic around how you approach that. That's number one. Secondly, I do come across a fair number of people where, I'll see that, hey, they just started a new role at a different tech company a month ago, and they left an old company, and that old company was VC backed, and kind of inquire with them to see, hey, what are you doing about those stock options from the old company? Because generally the way that goes is they have 90 days to determine whether they're going to exercise, or if they don't, they relinquish those shares back to the company. All right. Yeah. So what do they do there? Because that's one, well, I mean, look, maybe they left that company because they no longer had conviction in it. It happens a lot, actually. So, so in that case, for some people, it's maybe easy to just say, I'm going to just pass on buying these shares. I don't believe in the company anymore, which is why I left. Again, there are still other avenues to explore where maybe another company finances the cost of that exercise and the tax bill associated with it, and they keep half of the shares, but you get half. So instead of you paying nothing and getting nothing, you pay nothing and get half of the old company shares. That's a lot better sometimes. You'd rather get something rather than nothing. Even if you don't believe in the company, doesn't mean they can't turn things around, right? Plenty of companies have turned things around from where they were once at. So, I mean, every company that gets started, there's ups and downs. So if you leave at the down point, great. Yeah, that's fine. I get it. Maybe at that point, it wasn't, where you wanted to be, but it doesn't mean that, you should forego that hard-earned equity that, you had.
No, it makes sense. I was at a tech organization and I had to make the decision whether I wanted to leave early because I lost faith in the company, right? I was losing faith in the company. And I was like, do I stay 6 extra months and invest fully, right? Or do I leave early and exercise my own options? I ended up staying investing. I'm happy I did, right? They, was one of my biggest exits and I was very thrilled, though I lost faith in it, which shows you can be wrong, right? And I think that's what I love, but you just pointed out. It's like, even if you don't trust them, that's fine, right? Getting half of something is better than half of nothing, right? Or all of it.
Yes.
And so that's really great that you offer those vehicles to people, because I know a lot of people in my history who I've been with that's like, I'm just letting this go. I don't care about this. Like, this company's nothing, right? And look at it now.
Short-sighted, right? I mean, look, these are VC-backed companies where I'm, generally talking to people. I mean, VCs are looking to make a return on their investment. You
strategically,
bet your butt that they're going to kind of regroup and find ways to try and salvage value in the company, right? Whether that's completely overhauling the strategy, looking for a strategic acquisition, there's obviously some value there, or else they never would have invested in the first place. So I think that's, again, maybe the internal dynamics might not be great, which is why somebody wanted to move on. But I think, again, everyone preaches the importance of like having equity, skin in the game. That's how you build wealth. It can sometimes seem foolish to just like flippantly let your equity go for nothing, when maybe you have other avenues to explore that can allow you to retain some of that potential upside. Because again, you never know. Things can change very quickly, and maybe there's an asset that is part of that another company wants to acquire, and you could have generated real value that you accrued to yourself.
Exactly. That's when you're in the game of the business, the game of advising, supporting, and helping others through their journey in life. Do you ever find yourself, I myself was always in the early days of telehelping, I was like, oh, you know what? Like, it's easier for you to hire out someone for mundane jobs that you're doing than it is for you to continue doing, because you could be focusing on things that could grow your business or hang out with your family. And I realized one day, I'm like, wait, I'm not doing that. And it hit me one day. And I was like, wait, I'm doing jobs that I shouldn't be doing. I'm like, I could take my own medicine. Do you ever find yourself sitting there like, oh, this is really good advice I'm giving this person, I'm going to apply it to me?
Yeah, I mean, look, I definitely should be doing more of that, but it's like, you also need to balance the, as we alluded to earlier, it's like, hey, when you first start a business, revenue might not necessarily be there, right? So, but you also know that this mundane stuff is not a good ROI on my time, but then you're trying to balance it with, but I don't have a whole ton of revenue coming in just yet because I'm still building out the client pipeline and things like that. But, again, that's why you need to be in like a pretty solid financial position before even thinking about starting a business. And that's why, I'm, now that I really feel comfortable that I know how to do every last thing in the business and I've good processes and procedures set up, starting to outsource that. And really, you have to kind of have conviction at some point, right? You need to say, hey, this is dialed in, this process. And I just know if there was more kind of manpower, associated with it, that it would pay off. Nobody can predict the future, but eventually you have to know where the best ROI in your time is spent. For me, it's meeting with clients and building, kind of building out client plans. And, even part of that, building out client plans, eventually that might be something that I could bring a resource on to help with. But now it's still too early days to let that really be outsourced. But there are plenty of other things that somebody can help with, particularly once you have it dialed in enough. It doesn't have to be perfect. You need to kind of like let go of the perfectionist instincts, because that'll kind of like constrain your ability to grow.
Very much so. And one thing I always love throwing out to people when starting a business is, I started the organization in 2020. The first 2 years, I didn't collect salary. I didn't collect any earnings from the organization because I realized I could have, but then I wouldn't be able to hire the people I needed to build the business and grow it forward. So I was lucky to be in the position due to previous successes and then other revenue streams, right? Preach multiple revenue streams is something that I've always been told through my life. Never rely on just one cash flow. And so being able to have that and security allowed me to start telehelping and go 2 years without paying myself at all. And, there were days where you're sitting there and your entire day would just be covered with difficulties, and you had a team. I had a team of 5 or 6 at the time, and technically all their salaries could be mine, right? And I could be doing all their jobs and working 60 plus hours a week, but it was one of those decisions like, I'm building for a future. And those are decisions you make as founders. How much am I going to sacrifice of myself for what I believe, my convictions for what this organization could be in the long run?
Yeah, and people need to not discount how taxing context switching is, because that'll really run you down. Because even for a founder, I'm sure you've experienced this before, is you kind of run out of mental bandwidth before, the day is up, because you're just kind of context switching all day. And it really just drains you mentally, where you just need you almost can't help but take a break,
Yeah.
So, but then, that's where kind of outsourcing some of the things that you can train somebody else to do just as effectively, or almost just as effectively as you can. That's where a good ROI is on doing, finding outsourced help.
And that was great. I remember our first conversation. You struck me as someone who I didn't have to explain that to. And when you said, like, oh, this guy knows what's going on, he understands, because, and I remember telling you, it's not good for us to take on clients in our world, or a client to take on an employee, or if it's a full-time, a W-2, a contractor, it doesn't matter. Say they're going to create this role and they don't know what they want to do, or what success is measured, or how success is measured, or what goals are. You're destined for failure, or for a lot of pain, right? You could definitely feel your way through what I refer to as learning by braille, right? You can definitely do that, and it will work eventually. It's tough for when you're starting a company and you have to balance keeping the lights on with, keeping the business open. You're like, okay, can I burn a candlestick by doing it myself? I can do that by myself because I can't bring on someone else. So I'm the person, right? So it's my job. That's Marcel. It's a really great perspective, and I enjoy someone who I can align with and understanding that, and feeling that the alignment of the pain that goes into investing in something that will be valuable, not only to you and your family, but to others, and the guidance it gives. So I really appreciate that perspective. I really want to take this moment now to kind of figure, have you share who your ideal client avatar is, how they get in contact with you, a little bit more about your business. Give us that 2-minute information so that people listening, people that we're going to share this information out with, can say, you know what, I need to talk to Marcel.
Yeah, sure. So my business is Simplify Wealth Planning. You can find me at www.simplifywealthplanning.com. I'm also on LinkedIn under my name, Marcel Mew. My ideal client that I work with is tech professionals, right? I know that there are so many unique pain points with people in that world. Again, whether it be people at startups or in big tech, all have their own unique aspects of their financial picture that they need help with. I also do all the stuff that you might expect classic financial advisory relationship to be involved with, kind of helping with investment management and, lining up insurance planning and things like that. So that kind of all falls under the umbrella. But working with individuals, families where, at least one of the people are in the tech world, that's really, the sweet spot for me. Again, I know that, the value that I can deliver is many multiples of what the relationship will end up kind of costing. And, for me, that's of key importance, right? Is being able to demonstrate and deliver value to people, where it kind of becomes a no-brainer decision for them.
That's great, Marcel. I know that, like I said, I'm going to be connecting you with someone who I think can use that guidance as they're in a critical stage of making those decisions as well. So once again, this is Marcel Mew. Thank you so much for joining us on The Faces and sharing both your new professional journey. Again, congratulations, and the founding and starting of your organization. It's a beautiful challenge. It's a beautiful future that you have going for you. Thank you all for watching The Faces. My name is Cody Hall. I'm the host. Thank you for joining us, and have a nice day.
This video was brought to you by our official sponsor, Telehelping. Need support for your business? Telehelping connects you with top-tier remote staff to help you streamline operations and fuel growth. Go to telehelping.com and get started today.